In today's video, we are going to be talking about tax treatments, especially for the transactions you performed during the year of 2023. Whenever you do a stock transactions in this year from the January 1st of 2023 to December 31st, 2023, there are consequences of doing stock transactions. I'm going to be explaining to you how you need to treat your tax transactions this year. Your brokerage company, especially companies like Charles Schwab's or Fidelity, they are going to be sending you a tax document, 1099 document, sometime during the period of middle of February, beginning to middle of February of 2024. This 1099 document will have all the transactions you might have performed during last year. There will be three components of this 1099 document. They are going to be containing dividends, interest, and capital gains or loss for the year. So one component of the 1099 is called 1099-div, DIV. That will contain all the dividends you might have received from holding those stock portfolios in your portfolio, stocks in your portfolios in 1099 div. In 1099 INT will contain all the interest amount you would have received for keeping money, cash, or any other assets in your portfolio. And the last component is called 1099-B. That will contain all your capital gain or loss in 2023. If you have done stock buying or selling and made profits or losses, that will all contain in that 1099 B section of your overall 1099. Now, what kind of tax treatments are going to be done for your for the stock transactions? There could happen two things. Whenever you buy stocks and sell the stock, you could either make a profit, especially if you buy the stock lower, sell it at the higher, you'll have gains. On the contrary, if you sell low and buy high, you will have loss for those transactions. So there are two types of capital gains: short-term capital gain and long-term capital gain. Whenever you do a transaction within 1 year, these are called short-term transactions, and the tax treatment for short-term transactions are similar to regular taxes. Say for example, if you're in the tax brackets of 10% or 25% or like 35% or 37%, short-term capital gain taxes are going to be applied in the same rates, whatever that applies to you. For long-term transactions are going to be a lot different. It will be a lot lower. If suppose you are in 37% tax brackets, your overall taxes could be 25%, or if you are in a 25% tax bracket, your tax could be around 15%, or if your tax rate is 10%, you might not have to pay any taxes, zero taxes for your capital gains. Now, how is capital gain tax will be computed? So you have to net all your stock transactions in the short-term category and long-term category. What I mean by that is, suppose you did many transactions within a year. Say for example, you bought stocks, say Microsoft, at the before January 1st, 2023, and you sold it before the end of the year, and you made, suppose you bought it for $10,000 and you sold it for $12,000, you made a profit of $2,000. And similarly, and if you made another, like, stock, say Caterpillar, you bought it for $10,000, sold it for $11,000, you made $1,000. So net you made $3,000 short-term profits. If you had any losses during that time, say for example you had Peloton, you bought it for, like, $10,000 and you sold it for very low price, say $1,000, you lost $9,000. So net you had $3,000 gain, $9,000 loss. So net you had short-term loss. Similarly, you can calculate your the long-term capital gains. So you have basically Microsoft stock. You did not sell it last couple of years. You were holding it for more than a year. Say you had it from since like 2020, 2021, 2022, and you haven't transacted anything, and you bought the stock at a low price. Say your cost basis when you acquired the stock was $8,000 3 years ago, and today if your Microsoft position is gone up to say $12,000, your short-term capital has gone up to $8,000 gains, and on this $8,000, IRS is going to be levying a tax, long-term tax, as I explained, for those $4,000 capital gains. And similarly, if you had, like, short term, the taxes are going to be higher, as I explained, at your regular rates. Now, this is regarding what I explained to you is about the gains. How about the losses? So if you had losses, like I said, this is the net of all your transactions. Basically, if you had loss, IRS allow you to deductions for the amount of $3,000 every year. Say for example, you bought, like, Boeing stock at the beginning of the year, and you basically made a profit, from $10,000 to, like, $12,000. And then you had AMC stock you bought for $10,000, but you sold it for, like, you lost, like, $5,000. You had a loss of $5,000. So net basically, like, for the Boeing, if you made $1,000, and AMC if you lost $5,000, so your net loss is going to be $4,000. 5,000 from AMC loss, 1,000 gain from Boeing. So what the deduction you can apply is for this year 2023 is going to be $3,000. So out of this $5,000 loss that you had, you could have actually, like, take a deduction of $3,000, and the remaining basically like $2,000 it could be carried over for the next year in 2024. So for this year, for every year, basically you can have the deduction for 3,000, and going forward till all your losses are accounted for. And then so if you are doing any stock transactions, this is the first time, and you had some losses. Say for example, you did a bad trade, you bought something and the stock price has dropped, and you really feel like, there is no prospect that the stock is going to bounce. And if you want to take any, if you want to write against this loss, deduction against this loss, so what you could do is you could do sell the stock before the end of the last day of this year, December 31st. But I believe there are only a few more days left this year before the year closes. I think on Friday, which is on 29th of December, you could sell your stock if you had any losses, and you can write it off, the stop loss in your when you file your taxes. so that you could the $3,000, basically your overall tax burden is going to be reduced by this $3,000. When the brokerage company sends your 1099 document, please do review all your dividends, interest payments, and all your capital gains and losses. And when you file your taxes by April 15th of 2024, you have to provide all the information from your 1099 document while you file your taxes. There will be different schedules to complete the stock information. And if you do not, actually IRS might send you a letter that you have not provided required information. So this is how basically the stocks are going to be treated whenever you get your capital gain, the short-term gain, long-term short-term capital gain, long-term capital gain, or if you have a loss, how it will be treated. Hopefully you found this information helpful, and if you liked it, please do subscribe it, or if you have any comments, I would appreciate it. Thank you very much. Have a nice day.